to tonight's presentation. Welcome once again to tonight's presentation. My name is Yusuf. I'll be the moderator for tonight's technical training. For those of us that participated on last week's training on Tuesday, we talked about some key points. Part of those things we talked about is going to be useful, especially for most of us that actually started crypto simply because of a royal queue. I'm very sure majority of us running a royal queue, we are so new to crypto. Just few, to mention but few, that have been trading right before the introduction of royal queue. So this is a great advantage for us to come up abreast in the same feet with those people that have been trading before, because royal queue is a blessing in lots of ways. At first, it gives you an advantage to trade with ease using the bots. It also exposes you to a lot of things, lots of information, technicality, free training that you ought to have paid a fortune to acquire those knowledge. So that is a privilege, because if you happen to be in this wonderful team and you are getting this, you need to treasure it. So I want to use this moment to implore us, don't let us take any little training of this kind for granted. So I would like you to get prepared with your pen and paper and try to note out some key information that can really help us. Myself, I'm one of the beneficiary of all these things, because by this time last year, even this thing I am trying to teach, I don't know most of it. So courtesy of Royal Q, I am here where I'm where I am today. Glory be to God. So to begin with, I want to quickly do some little recap about last week training, where I talked about some key information about candlestick pattern. Before last week training, we have been given information on the other aspect of analysis. As we know that we have majorly two key types of analysis, which is fundamental analysis and technical analysis. On fundamental analysis, we have received several training on how to analyze market fundamentally. How? It is simply news. How? It is simply information about a particular token, deep info about how it works, how you can get their site, their Telegram, the size of community, the market cap of the coin, the the volume, and so on. These are information about the coin. Then the data that different tools may generate. Take it from Nomics, take it from CoinMarketCap, CoinGecko, Crypto Bubbles, Royal Q itself. They have this data they have set aside for you. This data will really go a long way to assist in determining what decision to make in the market. There is a video for that, so I would like to reference it once again. And for those people that may need it, I want you to keep it in form of your catalog, whereas you can watch it over and over again, in which you will reference to it. A lot has been said and explained vividly on that fundamental analysis training. I also watch it and rewatch it myself, because there are lots of loaded information, tips that you are going to find there. And those tips are going to really help you on your training while you are alone. That is the aspect of the fundamental analysis. Excuse me, 1 minute, please. Going forward with this, with all those information on fundamental analysis, let us take note of it. The best way of trading, in spite you using robots, is going to really help you in maintaining your portfolio. After paying attention on all those, the best way of doing this is while you try to do your fundamental analysis, then join it with your technical analysis. This too is going to help you. Plus, when you are following rules, I'm going to start from there because these are part of the things we discussed like last week. Talking about following rules are when we are talking about the principle of trading. These principles, those rules, you have to follow them. As a trader, you must not be too greedy. When you are greedy, you can easily burn your hand. As a good trader, you must be patient. You must not be panicked too much because if you are not patient sometimes, when you are panicked and you see market is not going to your direction and you easily just run into the market and you close your trade because you are afraid. Do you know the trade might actually later go to your direction? Patience is part of the key. Then time. Time also is point. You must know the actual perfect time you are supposed to enter a trade. This is achievable as a result of fundamental and technical analysis. By the time you have done the analysis, you know the perfect time to enter. And as a spot trader, you should know when to enter. You always buy low and sell high. So these are the little tips about you as a good trader. Now, after following all these rules, then after taking note of the fundamentals, it is also important to pay attention towards the what? The technical parts of the trading. By the time you now join fundamental and technical analysis together, you are going to have a very good result in your trading. You might not be winning all the time, but your winning rates will outnumber your losing rates. And the most important thing is when you are winning more than you are losing, it is a very good thing. So last week also, we talked about candlestick, we talked about green candle, we talked about red candle. We talk about what red candle is and what green candle is. We talk about other names we call it. So I'm going to start from there and I'm going to manage and share my screen. So I'll take it from there. So moving forward, I want to share my screen now. So to share my screen, please, if you can see my screen, kindly confirm, please. Can you see my screen? Anyone?
Yes.
Thank you, sir. God bless you. So I'm actually going to start from here. As I said earlier, really that really put much value in this. Let us try to set aside our pen and paper because we are really going to need some little tips to pen it down. Then we can always reference to it. So as you can see my screen here, this is candlestick as where I started last week. You know, I talked about candlestick that when you have a green candle, it means the buyers are in charge. It simply implies that the buyers are more than the sellers. And when you see green candle, you can see the arrow on the green candle. The arrow is showing that the market is going up. So you only see green candle when market is going up. That is, the buyers outnumbers the seller. When you see green candle, it doesn't mean that there are no sellers, but it actually implies that buyers are more than the sellers. The bulls are more than the bears. Who are the bulls? The buyers. And who are the bears? The sellers. So anytime you see green candle on a chart of a particular coin, it is telling you that a lot of people are buying more than people that are selling. And another thing I said last week, I said that green candle depicts that you are buying from the bottom, then it is moving towards the top. For green candle, I repeat again, the market opened from below and it closes above. That is what we have here. That is why you see this. It opens from the bottom and it's going up like this. It closes at the top. That is green candle. So I don't want to dwell much on it because we have treated that last week. So when you look at this now, open says that it is the opening price. That is where you started. Let's say if the price of a particular coin is $2 from here, $2, and it's going up, it now finished at maybe $4. That's where it ends here. So the moment it ends here, look at it, the green now started here again, and it is coming down. You know it will be reducing to like $3 back to $2. Do you get it? Here, $4. So this is how the movement of candle look like. The open says the opening price. The high means that where it is up, it is high because it has gone up like this from the low here. This is the low, then this is the high. For green candle, the low is at the bottom, at the open, while the high is at the top. And another thing I talk about is also the wick. You know, this line, the little line on top of it, these are what we call the wick. You can either call it the wick, the tail, or shadow. So that is the name for the green candle. So the other one for the red candle, as you can see the red candle, it opens from the top and it goes down and closes at the bottom. That is that about that. That is that about that. And remember something, for a bullish candle, the open is always below the close, and for bearish candle, the open is always above. You can see the languages that are being used here. You know, you didn't see anything like buy or sell here. Look at it. They are communicating in crypto language. They are communicating in forex language, in trading language. So when you hear the bullish, they are talking about the buyers, the buyers. And when you hear the bearish, the second one, they are talking about the sellers. So when they now say the bullish candle, you know, they are talking about this candle. And for the second one, the bearish candle, they are talking about this. So as a trader, those terminologies, you'll be familiar with it. If not, if a layman is just reading this, you may not be able to phantom a perfect meaning for that. So let's take note of that once again. Thank you. Moving forward, we are going to talk about what? Bullish reversal candlestick patterns. When you are talking about bullish reversal candlestick pattern, I explained little about this last week also. So such kind of pattern signify that buyers are momentarily in control. That is from the word bullish. That from the word bullish, it shows that it is the buyers that are in control. You know, I said when you hear about bullish, buying, the bulls mean buy. So you must have known when they're talking about bullish reversal candlestick, it means the price is actually moving at the upward direction. So moving forward again, based on this script, it tells us that these are 5 bullish reversal candlestick patterns you should know. The first one talks about what? It talks about hammer. There's a particular candle that you see. That is the name of that candle, hammer. So when you say hammer, it's not the hammer that the carpenter used, but when you look at it vividly, you will see that it actually looks like hammer. Look at it. Hammer. The second one, bullish engulfing pattern. The third one, piercing pattern. The third one, tweezer bottom. And the last one, money star. Moving forward again, talking about the hammer. The hammer is what we are seeing that I just circled. A hammer is a one candle bullish reversal pattern that forms after a decline in price. You can see that. It is explaining that it forms after a decline in price. In fact, I explained most of this thing last week. This was how the candle looked like before. This was how it looks like. It looked like this very candle, this one. it looked like this. See, it was so red like this. It was coming down. But because there was a bullish reversal, as the price decided to be moving up again, the price decided to be moving up again like this, like this. As it is moving on, the body will be raised. It will now remain the shadow. The shadow is actually the traces that the candle has already gotten to this place, just like this. But as it is retracing, as it is going up again, it retraces up to the last edge, up to this place. It now turned the candle to something like this. Look at it. Just a line. The moment it turned into full lines and it keep going up, the candle automatically turned to green. It turns to green. It was red before, but the moment there was a reversal, it turns to green and it forms something like this. That is what they mean by reversal. A hammer is a one candle bullish reversal pattern that forms after a decline in price, after the price was actually like this in red. But because there was a reversal, it was pushing it up, see, like this. As it was pushing it up, these were being erased. It was erased like this. It was erased, then decided to come like this until it forms, it keeps going bullish and finished up like this. That is why it looks like an hammer. So here is how to recognize it. Little or no upper shadow. This is what they mean. It has little or no upper shadow, like this. It might have little or there may not be anything on top of it. You will know that is hammer, just like the picture look like. The prices closes at the top 1/4 of the range. That is 1/4 of the range. What it means is that when you look at it now, when you divide this up to 4, it closes like 1/4. That is, this 3 went away and it now remained the last one. That is how to spot bullish hammer. Then the lower shadow is about 2 or 3 times the length of the body. This is what they mean by the lower shadow. You can see they are calling this shadow here. So wherever they call it weak, you won't be confused. Wherever they call it, what again, tail, you won't be confused. It is actually telling you the lower shadow, that is this shadow, will be 3 times or 2 times of the body here. That is what we call hammer. So whenever you see this, just know that this is what they call an hammer. Let's move forward because of time. Moving forward, the second one is a bullish engulfing pattern. So whenever they say the market is forming bullish engulfing pattern, this is how it looks like. This is a bullish engulfing pattern. That is, any bullish engulfing pattern, this is what it means. A bullish engulfing pattern is a 2-candle bullish reversal candlestick pattern that forms after decline in price. That is, when you are talking about bullish engulfing pattern, it must be 2 candles. Abi? One will be red, the other will be green. So the first one is going to be the red, that is this one. That's why they said 2 bullish reversal candlestick pattern that forms after as a bearish close. You can see this is the first candle. The bearish close that they mean is that it has a red candle. Simply put, when they talk about bearish there, they are talking about that it has a red candle. Then the body of the second candle completely covers the body of the first candle without taking into consideration the shadow. What they mean is that the body of the second candle, see, the body of this is the second candle now, this is the first candle. The body of the second candle completely covers the body of the first candle. That is, it is above the body of the first candle. It covers it. It is longer. It is taller than the first candle, which was red. Then the second candle closes bullish. Look at the languages. Please pay attention to all those languages, as I have been explaining. Closes bullish, meaning that it closes in green. It closes in green. That is why they say it closes bullish. For this green, it means bullish. It means it closes with more buys. Then, and this is what a bullish engulfing pattern means. This is the interpretation. When you see something like this, what does it interpret? On the first candle, the sellers are in control as they close lower for the period. On the second candle, strong buying pressure step in the close above the previous candle's high, which tells you the buyers have won the battle. You can see, I used to say in markets, when you see price movement, it means the bulls and the bears, they are in fights. But who wins determine the color of the candle you see. When the red is showing, it means that there are more people that when the green is showing, it is telling you that what? There are more people that are buying more than those that are selling. Then on the second candle, strong buying pressure stepped in and closed above the pressure candle's high, which tells you the buyers have won the battle for now. In essence, a bullish engulfing pattern tells you the buyers have overwhelmed the sellers and are now in control. So this means that when you see something like this, it means that the buyers actually bought more than the sellers. And lastly, a hammer is usually a bullish engulfing pattern on the lower time frame. If you are not sure how it works, then go and watch this video. So that is that about that. Simply put, this is saying that this is a bullish engulfing pattern. Then going to the next one, I've talked about an hammer. Look at it. This is hammer. We have successfully explained that. Followed by the second one. Followed by the second one, which is what? Which is a bullish engulfing pattern. This is bullish engulfing pattern. The reason they said bullish is that the green was the second candle and it is taller than the initial candle, which was red. So moving forward, the third aspect of it is the piercing pattern. What is the piercing pattern? It says that there are also two candles, as you can see. There are two candles, as you can see on the screen. Then it also shows that the first candle has a bearish close, just like the other one. The first candle has a bearish close. That is, the first candle was a red candle, just like the other one. Then the second candle is what? A green candle. If you look at this, it is exactly like the previous one. Red was the first candle. Look at it. Red was the first candle, green was the second. First, second. And in this too, red was the first, then green was the second. But what's the difference? When you look at the first one is showing that the red candle is shorter. Then the second candle, which is green, is taller. When you look at piercing pattern now, piercing pattern is showing that the first candle is actually red too, but it is taller than the second candle, which is green, that is shorter. Now, what are the implications? What is the interpretation of this one? On the first candle, the sellers are in control as they close lower for the period. That is, there are more seller than buyers. That's why the red is coming down. Then on the second candle, buying pressure stepped in. People started buying and it closed bullishly, more than 50% of the previous body, which tells you there are buying pressure around. This is what we are saying. When they say it is, the second candle is bullish, that is green, but it goes above 50% of the first candle. Now, dividing this red by 2, this is the half of it, 50%. When you see a piercing pattern, the green candle must be above above 50% of this, that is, you can see it is taller above that. These are the yardstick you will determine that it's actually a piercing pattern. Then it tells you, this is the implication, now it tells you that they are buying pressure, that after selling, the price has come down. Then people now decided to start buying from the bottom. There are huge buying pressure. That is how you see, why you see it like that. That is for piercing pattern, making 3. Going forward for the 4th one now, tweezer bottom. What do we mean by tweezer bottom? When I mean tweezer, I don't mean the tool you use to pick your nose here, although it sure looks like it. When you look at this now, it looks like that tweezer we are explaining here. But what we want us to know is that the 2 candles are red and green. The first one is red, second one is green. And the first candle shows rejection of lower price. What does that mean? The first candle shows that people are selling like this. It is a full body red. That's how this one look like. This red candle. You see, this red candle is a full body red. It was previously like this. But when there was rejection, this was erased. See, it was erased up to this level. It was erased. Then it later turned to this. This means that the candle was first full of red like this. Then later, there were some rejection. People decided to start buying. That's why it pushes the red candle back and turn it to this that you are looking at. You can see, it turned it to this. Then the green also, the green was previously like this. The green was also previously like this, full of green. But later, when there was a rejection, this green candle now, this green candle, okay, it was previously green. Wait, it was previously red. The green, it was previously red when the price was coming down. So later, the buyers started coming in. As they were coming in, they pushed the market. They pushed it back up like this. It now turned this body to just a line. They pushed it further. They now pushed it up to this level. That's why you have something like this. So for these two, is a tweezer bottom. A tweezer bottom is a 2-candle reversal candle pattern that occurs after a decline in price. Then here is how to recognize it. The first candle shows rejection of lower price. Then the second candle retests the low of the previous candle and closes higher. That's the tweezer. Then on the first candle, the sellers pushed price lower and were met with some buying pressure. What they mean is that they pushed it lower. They pushed it up to this point. The candle was red up to this point. That's what it means. And they later met some buying pressure. That is why it turned it back. It pushed it forward and it became a line. Secondly, on the second candle, the sellers again tried to push the price lower. I've explained it earlier. They also pushed the price lower up to this level. Then later, they failed. And they were finally overwhelmed by strong buying pressure. The buyers later pushed it back. They erased the whole red and it turns to green again. I'll show you physical example of it. I think I did last week too. If you can remember, if you were in the class last week. So in short, a tweezer bottom tells you the market has difficulty in trading lower after 2 attempts, and it is likely to head higher. Do you get this again? I want you to look at this point. Look at this point. I think red is more sharper. Let me use red. Look at this point here. In short, a tweezer bottom tells you the market has difficulty in trading lower. That is, the market finds it difficult to come down. That's what it means. Then after 2 attempts that it came down the first time. Let me show you. The market was pulled down. See, from this place, this candle now, the market was pulled down up to this level. and it was rejected up again. That's why it has a line up to this level. And again, it also pulled down from here. This is where the second one started. It pulled down up to this place. Then there was a rejection again. Buyers pushed it back and they pushed it further to this level. That's how you have these two candles. So it means that when you see this kind of a double hammer, which is called Tweezer Bottom, when you see this double hammer, it is telling you that there is a tendency that the next candle that will form, it will be going up. The next candle after here now, when this time frame stop and another candle will start from here, it means that it has the tendency of what? Going up. Based on this. That is the interpretation. I hope you get it. So moving to the fifth one, we are going to talk about Morning Star. What is Morning Star? We need to learn this when we are used to it. You later understand it. So when you are even doing your analysis, as you open your chart, trying to do analysis, before you even draw any support resistance or any pattern, you are going to see that you'll be able to cite a particular shape of a candle, and it can easily tell you the direction of the market. All you need to do is just make some confirmation from other yardsticks to join it, so that it will give you a double assurance that you are actually making the right judgments. So the last one, which is Morning Star. Morning Star is a 3 candle, as you can see here. This is Morning Star. The first one is red. The second one is a plus sign. Then the third one is green. Now it says that bullish reversal candlestick pattern that forms after a decline in price. You see, they said there was a reversal candlestick after a decline in price. The first one is the decline in price. That is, the price came down. Decline, they mean the price came down. Then after coming down, there was a bullish reversal. That is, the next candle, the third candle started going up. Now, when you see Morning Star, how can you recognize that this is Morning Star? That's the point of this. First, the first candle has a bearish close. The second candle has a small range. You can see smaller range. It doesn't really, it's not tall. It doesn't have a body. It looks like plus sign. There's a name they call it. So the second candle has a small range. Then the third candle closes aggressively higher, more than 50% of the first candle. It said the third candle closes aggressively higher, more than 50% of the first candle. You can see this is 50% of the first candle. It closes aggressively higher, more than 50% of the first candle. So when you see something like this, it actually means Morning Star. Now, what is Morning Star? When you see Morning Star, what is the implication? This is what a Morning Star means. On the first candle, shows the sellers are in control as the price closes lower. The first candle says that the price is coming down when you see Morning Star. Secondly, on the second candle, there is indecision in the market as both the selling and the buying pressure are in equilibrium. Look at it. This is what we call indecision, doji. Indecision. Neither the buyers nor the seller wins. It is draw. That is what it means, indecision. It means that it is draw. Neither the bulls or the bears win the race. When you see red candle, it means the bears win. When you see green candle, it means the bulls win. But when you see doji, this plus sign, it means that the fight was a draw. No, but neither the bulls nor the bears win. That is what it means. Then on the third candle, the buyers won the battle and the price closes higher. Can you see? Just like I explained, the buyers, that is the bulls, they won the battle here. So that's why it closes higher. In short, a Morning Star tells you the sellers are exhausted and the buyers are momentarily in control, just like what you see. The buyers later took charge after the third candle. That is the interpretation. Now, let me quickly scroll back. We have successfully explained 5 different candle shapes. 5 different candle shapes. That is what we have explained here. The first one is hammer. The quick recap now. The first one is hammer. This hammer now. The hammer is showing that there was a red candle before. The red candle shows up to this level. But later the buyers took charge again. They started deleting the red candle. They deleted it up to the top level where it opens. Then they still started going up to this one. That's why we have the green candle. Then, just because you see a hammer, it doesn't mean that the trend will reverse immediately. You will need more confirmation to increase the odds of the trade. Do you understand what this means? When you see a hammer, ordinarily, it means that this price will go up. Because first, people have already been selling red candle. Then later, the bulls just got angry and they started deleting the reds. They turned it to green. Don't just bank on this alone. You need confirmation. That's why we said both technical and fundamental analysis must be mixed together to give better judgments. Then secondly, we talk about bullish engulfing pattern as it is. Thirdly, we talk about piercing pattern. The fourth one is tweezer bottom, where you have double hammer like this. And when you see this, it also tells you that the price is going up, but you need confirmation. Then after that, when you talk about morning star, the fifth one is saying that firstly, there was a red candle followed by a doji. The doji means indecision. That is, neither the buyer nor the seller wins the battle. They are unequal. Then the third one now shows a green pressure that really pulled up above 50% of the red candle. Above 50%. This is telling you that the price is going up, but you also need confirmation. Then, after finishing the 5 different shapes, we are moving up to what? How to find this is 9:19. I'm trying to check the time. I've not used so much. Can you still hear me, please? If you can hear me, kindly confirm, please.
Yes, we can hear you.
Yeah, God bless you. Thank you. Now, moving forward, how to find high probability bullish reversal setup. Looking at this now, based on those previous 5 shapes that I showed you, is for you to identify them. Look at it. Hammer, bullish engulfing pattern, piercing pattern, tweezer bottom, morning star. After identifying this, and you can successfully interpret how they moved with the color, we now move to how to find high probability bullish reversal setup. Based on those shapes, then you can say that when you want to trade now, you don't want to trade any candlestick pattern in isolation. Mind you, this training is to help you further, to join your analysis with other things that you must have done. Based on this now, you don't want to trade all these candlestick patterns in isolation because it doesn't offer an edge in the market. So here is how you do it. If the market is trending higher, then wait for a pullback towards support. Wait for a pullback towards support. I'm still going to explain that. If the price pull back towards support, then wait for a bullish reversal candlestick pattern. This is what it means based on the last class, last week, where we talk about support and resistance. The one at the bottom is the support. The one at the top is resistance. That was why I explained the floor and the roof. The floor is the support, while the roof is the resistance. And in sport, that's why we used to say, you buy the floor, sell the roof. That is the language. You buy the floor, then sell the roof, meaning you buy at the bottom, then you sell at the top. Now, based on this now, if the market is trending higher, then wait for a pullback towards support. When the market is trending higher like this, you already see that it is up. This is not something you can enter. You wait for a pullback. This line I'm drawing is what they mean by pullback. Do you get? Wait for a pullback towards the support. This is the support line now. When a pullback comes here, then wait for a bullish reversal candle. That is confirmation. The moment it pulls back, you know it's possible for it to cross this line and start coming down. You now wait for confirmation. Whenever you see another candle that forms, green candle trying to form, then this is your confirmation. You can now say that this trade is good to enter here at this spot. Do you understand? That is what the statement is saying, that if the price pulls back towards support, then wait for a bullish reversal candle. The moment it pulls back like this, wait for a candle that will form bullish, green candle. Then you know that you have gotten confirmation that the price has been coming down and it is now low. Those traders that know the secrets of buying low, they know that it is already low here. They are buying. The moment you spot this, you know that this is an opportunity for you too. Then you buy the floor here too. You wait for it to go and sell the roof. I'm sure you get that. Then if there is bullish reversal candlestick pattern, then make sure the size of it is larger than the earlier candle, signaling strong rejection. What the third point is saying here, what this point is saying, what this point is saying is that this number 3 is saying is that after this one, you are waiting for the price to pull back, and it already pulled back. Then you now wait that the next green candle that is giving you confirmation, it must be higher than the previous red. That is your confirmation for you to decide that, okay, this market, this price is going bullish. Now, looking at the screen now, this is a pictorial explanation of what we are saying. You can see, I talked about Morning Star earlier. What's this? What's this now? Vague. Sorry about that. So looking at this now, this is a Morning Star shape. Based on what we were explaining here, let me show you. Let me quickly show you. Look at this again. Look at this one, Morning Star. See how the shape looks like in a live trading, in an actual trading. This is where they point it out here. Look at it. Morning Star. Look at the shape now. Look at the Morning Star. You can see. First, you got a red candle, then followed by doji. See, then you have a strong bullish candle. This is a confirmation. When you have this, you know, you have this. Mind you, it was warning you that it must be coming downward. This is this line now, this black line. That black line, that's your support. Can you see? So it is coming towards the downtrend. Then you see this. After you get the Morning Star, you see a confirmation of green. It is telling you that the price is going up. See what happened after that. The price keep going up based on the analysis. So that is the importance of spotting all these shapes. That's Morning Star. Moving forward again, bullish engulfing pattern. The next one is bullish engulfing pattern. Let's go and stop it, spot it. You can see, when we were reading bullish engulfing pattern earlier, you can see how the shape looks like. Bullish engulfing. Bullish engulfing is saying that the first candle was red, then the second one must be green, and that green must be taller than the previous red. Let me draw it in the color so we'll get it. The first candle was red, then the second one must be green, And that second one, green candle, it must be what? Taller than the first one. Look at it. This is what? This is bullish engulfing pattern. And when you spot this on a trade, it is signaling to you that the price has tendency of going up. But ensure that wherever you spot it, it is on a downward trend. Don't go and look for a trade that you see that there was something formed like this. Let's say, let me give you an instance of what I mean. You have something like this. This is resistance, or this is support. Then you now see an upward movement around this place, and you spotted something like this bullish engulfing pattern. You now said, somebody have explained that wherever I spot this shape, the market will go up. No, because you have spotted it on an upward trend. Do you get? Ensure that whenever you want to do this, you are actually spotting it around somewhere here with confirmation. Do you get? Confirmation. When you spot this kind of shape, just look for confirmation. Then you see that you are buying at the bottom. But don't just interpret this tonight class that one Oga said that whenever you see something like this shape, bullish engulfing pattern, it is an upward movement. You should go and buy. Do not buy the roof, except when you are trading futures. So please kindly note that. I'm sure we understand the bullish engulfing pattern, just like how we showed it earlier. Look at it. Bullish engulfing. Then let me go and show you again at the top of the screen. Let me quickly scroll up. Look at it. Look at it. Same shape. Bullish engulfing. That is how it looks like. Let's move forward. Moving forward now, let's check the next chart, which is showing what? Another bullish engulfing pattern. Look at it. Look at this. Is actually a live chart that the person is showing you based on that analysis, that when you see bullish engulfing pattern, the first candle is red, the second one is green. The green is taller than red. This is a bullish engulfing pattern. But you must spot it at the downward trend, which must touch the support line. See the support line. See that black line. This black line is the support line. Look at it. Support line. When it touches it, you see red candle, then green candle that is taller. You must have seen that, okay, the buying pressure of that green candle is giving you a sign that the market has tendency of bullish, which is actually bullish. Look at it. So looking at these two is the same thing. See the sign? Look at the sign, then it is actually bullish. So that is what it is. Moving forward again, as we have shown us how it works, we move to bearish reversal candlestick. When we say bearish, that is...
Sorry, leader, is you sorry to cut you. Can we just let's postpone this till next week, because
okay,
people might find it too much for them.
Okay, so that they can digest it. And let's stop that. We will just get to finalize that we treated a bullish pattern alone. So starting from here, I've done the quick recap like twice now. So one of the first thing I said today was, I talked about the red candle, the green candle. The green candle opens from the bottom and it closes what? At the top. Then the green candle is an upward movement, which implies buy. It means the buyers are in charge. It means the bulls are in charge. It means people are longing the trade, the long. So we have to note this for the green candle, for the quick recap. The red is the red candle, which is what? For the sellers. The bears are in market, in which it opens from the top and it closes at the bottom. This opens from the top, it closes at the bottom. but the green opens from the bottom and it closes at the top. After noting that, we also talked about the reversal candlestick, which I talked about hammer, bullish engulfing. Okay, what other thing did I talk about? I talked about piercing pattern, which is somehow these two, they look alike, but mind you, there are some differences. So let us try to pay attention. For the bullish engulfing pattern, the red candle was shorter, and the second candle, which is green, it is taller. Compared to piercing pattern, the red candle was taller, then the next candle, which is green, is shorter compared to the red, the previous red candle. Moving forward again, we talk about the tweezer bottom, where you first have two downward trend. These two candles says that initially the price was coming down, but the buyers rejected it. They pushed it back. That is why you later have something like this. This one too, the sellers were selling. Later the buyers took charge and they pulled it back up. So that is the tweezer bottom. What is wrong, girl? What is wrong? I can't seem to control my pencil again.
It's used to her.
I can't seem to control my screen again.
You can stop the screen sharing and start all over again.
Right.
It used to happen sometimes like that.
I think it's
Stop
fine.
stop the screen share.
Oh, the whole of my screen is now hanging.
Okay, you can now minimize, or you just click on the off button.
Even the minimize, everything is not working.
Click on off button like you want to switch off. Like you want to switch off your phone.
Okay. Sorry about that glitch. Moving forward, I talked about tweezer bottom, talked about Morningstar, and I showed us some charts that actually explains the interpretation of those shapes and movements. So we are going to stop here tonight. This is 9:35. I think we started 9:40. So let's use the remaining 5 minutes to attend to some questions, clarification, suggestion, or any contribution that could be added. So I think we are going to stop here. By next week, we'll continue on a bearish reversal candlestick pattern. Thank you so much. If there is any question, suggestion, we can raise up our hand so we handle that. Okay, Madam Grace, you're welcome. You have the floor. Please go ahead.
Thank you. Thank you, sir. Good evening. I'm so excited to stomp into this meeting. I think I missed the last one. I think what you did here tonight is what every enthusiast of crypto should learn, should know. I'm just sad that the number is so few. I don't know, Mr. Moshman is here, how we can make this open to the general house. Mine is more of a request. I would love to have your, I don't know if you can share it with me, the manual you're using. This is one thing I've